All right. Hey, everyone. Mark here. Mark P. Markets, Mark Principato. I'm a charter market technician. Thank you for joining me for another Greenbridge market analysis. In this session, I'm going to update what we talked about earlier in the week. Okay, hold on. Let me just make an adjustment here. What we talked about earlier in the week as far as reward risk and support and resistance levels for the various markets that we follow. Now, if you're new to the channel and the stream that I do, please share your symbol or the market that you'd like me to analyze for you in the chat now. So once I complete my portion of the analysis, I can answer your question. Please, one symbol per person, but usually on a Thursday, since I'm not simulcasting, I usually have a little more time to answer more questions, okay? Also, if it's an altcoin that you would like to see, please put USD or USDT after the symbol so I don't spend time on the wrong symbol. All right, so with that being said, let's get this thing started. So this is for educational purposes only. For investment advice, please consult a licensed investment advisor. First, let me say hello to a couple of people in the chat. We got Jesse, right? Jesse from Poughkeepsie. We have Joel. Hey, good to see you. And Elizabeth, cool. Thank you for sharing your questions early. I will definitely get to those. All right, so let's start off with the Bitcoin situation, okay? And Elizabeth, this Bitcoin analysis, you can also consider this as far as Ethereum goes, because Ethereum is a follower and is not a leader. So whatever goes on in Bitcoin, you can also use that as a piece of information that can help you shape decisions as well. So let's talk about Bitcoin first. Now, I've been talking about this over and over and over for people that have been watching my analysis. This is a high risk area for longs, the 50K area. That means 48K, 49K, 50K, 51K, this entire zone. So that's why, for one, I'm focused on daily charts, right? Because we're looking for swing trades. People that focus on smaller time frames or get confused by them are going to see or would have seen buy signals in this area right here. And I've been saying, stay away from them if you think you're looking for a swing trade, because this is a low probability area for buy signals. And here we go. We got the red candle outside bar. All right. This is, I can't tell you that this is going to happen, but I can tell you that there's a good chance that selling activity will reassert itself in this area. It's a resistance. And we're not in a full trend, okay? We're still in the wave 4, which means a fake out is very likely, right, in such an area. So I have no problem staying away from it. I want to see a support. Now, the supports that I've been looking for, Bitcoin just doesn't want to deliver them, all right? I'm looking for 44K. I don't like this. This is a minor support where it is right now. I don't like this area. It's still too close to 50K. The reward risk just doesn't make sense for me. Maybe for a more aggressive trader, if you get the inside bar or some kind of reversal here over the next day or so, and you want to give that a try, again, you're still dealing with the same obstacle, and that is the 50K resistance and faking out. So the more aggressive trader needs to really stay on top of it and babysit, because you may have to make a quick adjustment. The problem with a lot of less experienced traders is they don't know how to adjust. They don't know how to get out because they go into hope mode and they hope that, it'll come back, it always comes back and blah, blah, blah. And there's no way to know if it's going to come back that one time or if you're going to get the pullback to 41K. There's no way to know. So what you have to do is take the loss early if it does not behave as expected. And people don't like to do that because people like to avoid pain. And losing money is painful, even if it's a small amount of money. So my point is this. I don't like this support. I want to see the 44K area be touched, tested, and perhaps we get a reversal there. That would make a little more sense in terms of reward risk. So as far as when something like this can unfold, maybe over the next few days. That's the whole point of me doing this analysis on a Thursday. We're updating our outlook from Monday and basically formulating scenarios as to what is reasonable in terms of price structure over the next few days going into next week. All right, so either 44K or the 41, 42K old resistance which is now a new support area. That's the area. So either Bitcoin delivers one of those areas and then gives us a confirmation, meaning some type of reversal that we can measure risk from, or I have nothing to do, because there is no such thing as the fear of missing out. You're not missing out on anything. Okay, people ask all the time, should I buy Bitcoin now? What do you think of Bitcoin? Well, should I buy it now? Should I buy it now? Should I buy it now? People that ask me that over and over again, it's very obvious that their focus is on profits. And that's not the right thing to focus on. I know that's counterintuitive, but if you focus on profits, you invite fear into your decision making. Because again, losing money is painful, making money is pleasurable, right? I mean, that's how our brain interprets these things. And you don't want emotions getting in the way. So in order to minimize that, if you focus on capital preservation, I've been talking about this all week, if you focus on capital preservation, meaning you're taking more of a defensive mode, you're looking more at the risk and being more selective and saying, if it goes here, I'm wrong, I'm getting out, I'm taking the loss or whatever, preserving capital. That can also mean not taking any trades at all, right? And that's really where I am right now. I don't care where this thing goes. Now, as far as missing out, right? People think that there's this idea of missing out, but in a financial market, there's always another opportunity. All right. You may miss this one opportunity, but as long as the market is still there, there will be another one at some point. All you have to do is wait for it, and it doesn't cost anything to wait for. So that's why the defensive mode, especially in this environment, it just makes a lot more sense. All right. So that's Bitcoin. Let's talk about the stock market real quick. And again, thank you for all of your questions. I'm going to get to those. So this market has been in ridiculous mode, okay, for a while, for weeks and weeks and weeks and weeks and weeks and weeks and weeks of ridiculous mode. Now, there are some reasons for that. For one, this time of year is typically low volume, particularly this month, and these 2 weeks in this month are extreme low volume, right? Why do you think they have that stupid meeting that they're having in Wyoming, right? Their Jackson Hole meeting, because all the central bankers need to take a break and they all need to, tell bad jokes to each other and whatever else they do over there. I'm sure there's some political things going on over there too, okay? Why do they pick these 3 days to do that event, that little getaway for all the central bankers and economists? Because there's nothing going on in the market, okay? There's low volume. Now people say nothing going on. Look at this 500-point move. Right, but there's no volume behind this. This is a time when you can't really judge the price action and put a lot of weight on this, because it can give it back just as fast, although it hasn't really started to. Like we have this little red candle today. What is that? Minus 87 points. Wow, that's the biggest pullback we've seen in a whole week. Okay, I'm sure there's people making big dramatic predictions based on that, but it means nothing. So based on this chart, we can still argue that the market is strong. We have higher lows and higher highs all over the place. But because it's low volume, and because there are no catalysts, and because we're still in stimulus mode and all this other garbage that's going on, this is a high-risk area. It's coming off of all-time highs, right? Very high-risk area, high risk of retrace. So swing trades for stocks are going to be very tough to take at these levels, because this market has a real pullback at some point, and you give back that 500 points, right? It could occur in a couple of days, right? I mean, it moved in 3 days. It moved those 500 points and really has not gone anywhere since. Now that we're into this meeting, we have one more day of the meeting, and we'll see how things go next month, right? The next big financial event would be non-farm payrolls, which I believe is next Friday, okay? So, again, the market can give it back just as quick if there's some kind of surprise catalyst. My point is, risk of retrace very high for stocks, especially market stocks. Now, what is this environment good for anyone? Well, day traders, sure, because a day trader can take a small bite, and a day trader is not exposed, or they should not be exposed, to this magnitude of risk, because there's no guarantee that it's going to find support at 14,750 again. It may break it, okay, especially after a move like this. If there's a lot of longs caught in something like that and it retests the support, it may break that support. And if it breaks and clears that support, of course, we'll have to see that across the board. We'll have to see that in the S&P. We'll have to see that in the Dow. and all that other stuff, right? We should see similar activity there. If we see something like that and the party is basically over because that support is broken, then you can see a pronounced bearish movement. Now, that's not the same as a bear market. That's just a normal pullback. We're not even talking about a bear market here. And the real support on something like this, after 14,750, you're looking at, what is this here, 14.4, 4.5, right? This area right here, you're looking at that. And if that's cleared, you're looking at like the 14K area, which is really the more sensible place for swing trade longs. Now, these other supports like 14.7 and 14.4, those may offer buying opportunities across certain stops. Let me just give you an example of what I'm talking about when it comes to stocks, because we're talking about relative strength. Here's Bumble, right? We sent this out as trade of the week, not yesterday, but the week before, okay? And the first thing, when we sent this thing out, it tapped everyone in on this red candle right here and then went red. Now, it never went to the stop, okay? The premise behind this trade was because the S&P had pulled back, right? It was that pullback just before this next leg higher. The premise was if the stock market can rally, this thing may break out because it was relatively strong. Now, Bumble is not a highly correlated market stock, but often you get that type of effect if you really have a broader rally. And look, it broke out, okay? As the S&P and NASDAQ made those ridiculous highs, it broke out and the trade went from red back to green, never touched its stop. Now, at this point, there's a sell signal in it. And, you know, I don't think this thing reached its first target. The low here is 53.45. What's the high? 55. Yeah, I think the first target was higher than that. I believe it was like in the 60s or something. I can't remember. Anyway, but something like this would call for an adjustment because this is not what it should be doing. Okay, so what do? Perhaps you reduce part of the position if it's green. Perhaps you take a small profit and just get out of the whole thing if you don't like what's going on in the market, that type of thing. But you have a choice right here. Or you can just leave the stop in place and see if it goes to the stop and assume the total amount of risk that you assumed from the beginning of the trade. Anyway, I just wanted to point that out as an example between when I'm talking about something like the S&P and NASDAQ and stocks in general, okay? This relative strength relationship exists to some degree in most stocks, but some stocks are more correlated than others. So it's important to understand the stock. It's the same thing like looking at Bitcoin and an altcoin, okay? It's a similar type of relationship. Okay, anyway, so let's jump over to gold real quick. And again, thank you all for your questions. I'm going to get to those once I complete this analysis. Now, gold. Here's the situation. Again, people love throwing around opinions with gold, but this is what you need to pay attention to. And like, I don't care what people say. I don't care what the Fed says. I don't care what the experts say. None of that matters. What matters is this. This is the bond market, okay? Now, the bond market gave us a sell signal yesterday or whatever, right? Yeah, yesterday. This was a sell signal. Not only that, in the bond market, you have a head and shoulders. Okay, that's nice. We have a bullish pin bar today, but that doesn't really mean anything. Now, I'm showing you a daily chart. Let's look at the weekly chart because that's really, when it comes to bonds, they move very slow. So you need to see a bigger picture. Now look at this. So in the bond market, we have a sell signal on the weekly chart. All right, it took out the previous week's low. You see that? Now, and we have a lower high that was established a few weeks ago. That is bearish for bond prices. Now, how low will they go? There's no way to know. But the thing is, if they take out this support right here, which they're trying to, if they take that out, then we may get a more decisive move in the market. Why? Because that will tell us that interest rates are going higher because the interest rates are, the yields are inverse to the bond prices. So you need to pay attention to this, right? The bonds have been moving very slow over these look at these previous couple of weeks. We had a bullish pin bar like 3 weeks ago, followed by a bearish pin bar, followed by, the break this week. All right, great. So we'll see if that follows through. That's going to affect the dollar. Now, here's the dollar. That's the dollar on the weekly, all right? The dollar recently broke out from this high here, and it's kind of hesitating a bit. But that is a tiny move. Let's take a look at the daily chart for the dollar. So the dollar has been trying to keep this bullish trend going, as you can see here. And that's a higher low in the dollar. That's right in line with what the bonds are doing and all that other stuff. That's an old resistance, new support. If that higher low follows through, we are looking at rising rates. That's what the market's telling us. That's what the smart money's telling us. Because who trades the bond market? Okay, it's not little retail traders. So back to gold. That takes us back to gold, right? So gold is inverse to the dollar. And by the way, Jesse, this is also going to affect your oats trade. Now, so while gold has been gyrating in here, right? It had this bounce and people got all bullish, and then it gave a buy signal followed right by a sell signal. Now it's hesitating a bit. This is a tough spot. Should that be a new buy signal? Well, it should be. But the thing is, in a rising rate environment, it is not likely to go very far if that is what we get. Since we are still in this indecisive mode right now in the market, you have this resistance area on gold. So all opinions aside, I know inflation and blah, blah, blah. I mean, you know, now you go to the supermarket and something that was like $5 is now $15 and whatever. I understand inflation and gold should be doing better. But it doesn't matter. All those opinions don't mean anything, and especially over the short term. If gold can't break this resistance and you see the dollar going higher and the bonds are doing what they're doing, this is probably going to go test supports again, just like everything else that's against the dollar. So my point with gold is, while it may look like a higher low, especially on smaller time frames, this is really not a good spot to be buying gold, right? If anything, wait for a support, okay? And your supports are here. What is that, 1750 area? Right, this thing right now is at 17, it's just, what, 1790? So it can still give you like 40 more points, maybe more. And perhaps it gives us a double bottom at some point, I don't know. But the point is, you're buying near a resistance in the face of a rising dollar. Not good reward risk, okay? Not a good probability scenario for gold. All right, so I just wanted to point those things out. Let me jump into your questions now. I see people have put a lot of questions. And again, thank you for your patience. I hope you found my analysis portion of this useful. All right, and if you have, by the way, if you can, please press the like button. I guess that would help with the YouTube algorithm or something. I don't know. I don't get much following anyway with these things. So, Jesse, thanks for joining me. Okay, no problem. Speaking of that, ZOZ. Okay, let's take a look at the oats. ZOZ 2021. So we have our oats because you like the oats futures. Now, again, so oats obviously is going, look at that. Did you get long? I know we talked about this before, and you were asking about a long on something like this. I don't know if you took it long, but that would have been nice. Anyway, here's the thing. So, sign of inflation, all that other stuff I just finished talking about, we can't have opinions on. But the thing is, you're at a potential double top, okay? And the dollar looks like it wants to continue higher. So since you're fighting the dollar in this case, if the dollar works its way higher, you're likely to get a double top here. So, I mean, this would be a very aggressive short, right? If you're into shorting something like this, very aggressive. If that inside, you have the inside bar. If that inside bar low is taken out, you will have a sell signal. But again, this is just counter the dollar, right? You're going against the dollar. So you have to watch out for that. And you'd want to get out of that, start taking profits off the table quickly. You know, maybe around this support area here, which is what, 480, somewhere around there. That's an aggressive, very aggressive short because it's counter trend. This trend is clearly bullish. So you have to be careful of something like that. But again, if you're betting on the dollar continuing higher, this thing is not going to go much higher. So if anything, this is a bad place to be going long, right? People that are going to try to go long this breakout are taking a big risk with that dollar going against them like that, okay? So a few things to keep in mind there. Otherwise, if you're interested in longs from a more conservative level on oats, right, that one support, like I said, 480, that would be one location. The other location would be right here. What is that? 467. Those would be your support areas to anticipate for new longs. Now, again, when it comes to something like oats, and again, it's a beautiful chart. So in theory, until those supports are cleared, you should be looking for higher lows, but you just have to keep an eye on that dollar index, because if it continues to strengthen, then this thing is not likely to go very much higher with all that pressure, okay, from the dollar. So thanks for asking about that, and I hope that answers your question. I mean, so I think you can get the higher high, but the chance of follow through, I think, is low, because again of that dollar argument that I gave you there. Okay, so thanks for asking, Joel. Hey, no problem. I'm glad they're helpful. Can you please explain what you mean when you say you're not short Bitcoin? Okay, all right, it's a good question. I get that question a lot, Joel. So let's see. So as far as Bitcoin goes, well, it's really an issue of leverage, because we don't like to use leverage on these instruments. So in order to short Bitcoin, you have to use leverage. So that's one thing. The other thing is there are exchange risks where, I mean, for most people this doesn't matter. There are exchange risks where if they don't like the way something goes, they can just basically manipulate the trade or claw it back, or whatever they called it. That happened a couple of years ago, right? Where there was a short or whatever it was, and they actually broke the trade. So there's no regulation in that space when it comes to that. Other instruments with stocks, Forex, whatever it is, you can easily short that stuff and you don't have to deal with that kind of nonsense because those are regulated markets. So those are two reasons. But the primary reason really is the leverage. And it just makes things a lot easier too. You don't have to play both sides of a market to get ahead in the game. I mean, we have a pretty good track record as far as our swing trades go, and not one is a short. Okay, and people say, well, you missed all this opportunity. What opportunity? From back here when it broke this one time? Sure, you can make money on the short side, but it requires a lot of attention, and you're fighting a deflationary asset on top of that. So the longs have just been better in that regard and easier to deal with. So it's just really a matter of personal preference when it comes to that. But it does make things a lot easier because we only have to concern ourselves with one side. And if we want to short something, there are plenty of other instruments for us to short. Okay, we love shorting Forex and certain stock indices and all that other kind of stuff when there's an opportunity. So thanks for asking about that. I hope that helps. Elizabeth, can you have a look at Ethereum? Sure. Is a double top forming there? If so, what could we project as a good long? All right, so let's take a look at Ethereum. And so again, like I was saying before, with Ethereum, you're dealing with, again, it's following Bitcoin, right? So you can get a lot of clues or a lot of answers by looking at your Bitcoin chart. Let me see if that's the right chart. I think that's the right. I have a couple of charts here with support and resistance lines on them. Okay, so here's Ethereum. Yes, that is a double top. Very clearly, double top. It's funny, I saw a video with a title on it on YouTube. I didn't watch the video, but it was one of those videos, Ethereum to 5,000 over the next few days. It's such nonsense. I hope none of you are being lured by those dopey videos. And I look at the views, it's got like 14,000 views or whatever, 20,000 views. Who believes this nonsense? Okay, every time, and I'm sure when they made that video, Ethereum probably looked like this, okay? It probably looked like that when they made the video. Oh, Ethereum's going to 5,000 and blah, blah, blah. Watch my video. And it's not at 5,000. Okay, so please stop following those videos unless, you just like entertainment or you like to do the opposite of them. But it's just amazing to me that, I provide like practical levels and all this other stuff. And, I've worked in the industry and blah, 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 blah. And you know what? None of that means anything. Because these marketers appeal to emotions, and that's why they get all those views. I don't appeal to emotions. I just tell you the reality, and only some people can appreciate that, like the people that are here. Anyway, so yes, Elizabeth, double top. Now, we don't see a clear double top in Bitcoin, but that doesn't matter, right? Like they're not going to move exactly together, but the thing is you have the sell signal in Bitcoin, and you have a double top here. So they are doing a similar thing. So now, to answer your second part of your question, what's the next support to watch for? You have a support right here, which is what, 2960? You can round that to 2950, but that's probably going to coincide with that 47K or whatever it was, 46K support where it is right now on Bitcoin. So it's probably going to coincide with that, meaning if Bitcoin breaks that level, this level will probably break too. So I wouldn't put a lot of weight into this level, and I wouldn't be looking for aggressive trades there. All right. So a more reliable level, let's see, you have something over here. What is this? 2890. Is that right? That's the high there? 2890. Yeah, and what was this low over here? 29.50. All right, so it's not that. That's a, this is basically a zone because it's not a big, it's pretty much the same area, okay? So that would be like your support zone in there. So you may get a reversal in that area, and I would still consider that an aggressive trade, but you have to keep an eye on Bitcoin. Because if Bitcoin, again, is fooling around 50K or 48 half or whatever, and this thing gives you like a buy signal somewhere in here, you need to be prepared to adjust to that if Bitcoin fakes out again. Because Bitcoin really needs to get away from that resistance area, or it needs to clear it decisively to give us a better reward risk situation. It needs to do one or the other, not keep fooling around in between. Now, the next support, if that zone is cleared, the next support is right here, which is 24, basically 24 even. And that's going to coincide with 35,000 on Bitcoin because I know it's the same pattern, right? So those are your areas. It's either like that 20 between 28 and 29, or you're looking at like, the 23 area or 24 area, all right, for Ethereum. And like I said, just keep an eye on Bitcoin in those situations because Bitcoin is going to have to do something similar. Like, for example, if this thing gets to that lower price, okay, if this thing manages to get here, 24 whatever, and Bitcoin should be giving you some kind of reversal, double bottom, something that's saying that it wants to go higher also. If it's not, then you can't step in front of this thing because it's going to follow wherever Bitcoin goes. All right, so thank you for asking about that. I hope that helps. Inherent QTUM. All right, let's take a look. QTUM USDT. All right, let's see. So now keep in mind, when Bitcoin is doing what it's doing, right, most of these alts are followers. Occasionally you get a leader, but a leader or something that's doing its own thing, I shouldn't call it a leader because none of them really lead. Occasionally you get one that does its own thing. Finding one of those is like playing the lottery. It's like a penny stock. There's some hype going on somewhere in some chat room and everyone's piling into it and someone's making a lot of money on all the people that are piling into it on the highs. Okay? So my point with that is most of these coins are not going to do that. So it's safe to say that the majority of these altcoins are going to follow Bitcoin. And if Bitcoin's pulling back, they're all going to do the same thing. So you have that double top situation, very similar to Ethereum. What's this high here? $14, right? About $14 you're looking at. And it's breaking the support. So just like Bitcoin, I would step aside. No reason to buy this thing at this price. Even though it's slightly more attractive, you got plenty of room to pull back. So you have this level right here, which is not too far from, which is what? It's around 11.5, maybe $12. That's one level to anticipate. And then you have this level right here, which is 7.25 basically. So those are your support levels where you're anticipating some type of bullish reversal. Again, Bitcoin needs to do the same thing. Now, what can happen over the next few days, again, if Bitcoin hesitates, you may get an inside bar develop, over the next candle or so. You may get something like this, like a green inside bar. And you have to be very careful with that because it could be a buy signal if the high of it is taken out. But the question you have to ask is, again, because everyone's focused on profits, people, oh, buy signal, I gotta buy it before I miss out. But the real question is, how far can it go before it gives you a hard time? And is it worth the risk, right? And if Bitcoin is in a situation where it's not really worth the risk, then it doesn't matter how many buy signals you got. Look at this, just to give you an example. Look at this over here. Right? See that candle right there? Let me make that real big so everyone can see it. This candle right here, this is an inside bar, okay? That's a buy signal when you took out the high of that candle, which was taken out over here, right? Buy signal, buy it before you miss the opportunity. Buy signal. Well, the buy signal has not gone very far, okay? That's what I'm talking about. And a lot of people get sucked into that nonsense. So a buy signal alone is not enough. You need a level that also makes sense. And Bitcoin needs to agree. These things don't trade on their own. So to answer your question, yeah, step aside, wait for a level, wait for a buy signal at a level, and perhaps you'll have a swing trade idea. I mean, this thing is at a decent price, so you can get a decent swing trade out of something like this. but Bitcoin is going to have to agree with it, okay? Or Bitcoin and Ethereum. This one looks a little more similar to Ethereum with that double top. So I hope that answers your question. Thank you for asking. Let me see what else we got here. So that was QTUM. All right, Joe. Hey, no talking. Oh, because, yeah, we had to cancel it. Well, yeah, you know, other people's schedules are conflicting. So that's why we had to cancel it. But, you know, hopefully next week we get it going again. That's the problem when you have three people that, you know, that have to keep the same schedule. All right, anyway, so thanks for asking. But yeah, so when we don't have that, I had no trade of the week to send out and all that stuff. Anyway, okay, so Stephen from Germany. Hey, oh, and by the way, if anyone wants to share the city, I always forget to mention that, but I usually remember that more with TradingView. You want to mention the city or country that you're in, that's always a fun thing to hear. All right, so Stephen from Germany, welcome. Please look at CDR. Okay, okay. Oh, I think you know what, you asked about this on a previous stream. I remember seeing the question, but I couldn't answer it. So I don't think that's it. Let me see here. Let me find it. Oh, CD project. This looks like it right here. Okay. So yeah, thanks for coming to the stream here and asking the question again. So it's a stock, a German gaming. Oh, it's a Polish gaming stock. All right. So let's look back. And let's take a look at some price structure. It's the first thing. So as you can see here, this thing, just looking back, judging on this, you're fighting this right here. All of this isn't very good. I mean, that's clearly bearish. Okay, bearish structure. Not only that, but the bearish structure took out these lows from back here. So that qualifies it more of like as a bearish trend once it does something like that. Because sometimes you can have a bearish structure that's correcting a previous bullish structure, which means the broader move can still be higher. But in this case, it's proved otherwise. Okay, fine, no problem. Now, the next thing you have to look at are the levels. And here you have a resistance right there. What is that level? Basically what is that? The high over here is 206, 203. So let's just say just over 200. Let's say between 205 and 210, okay? That's your resistance that you're dealing with right now. So in terms of structure, even though I could see why you might have some interest in this, you have a higher low that's developing right in this area here, okay? And it's after an attempt, this bullish attempt, right? It tried to give you some little minor higher lows and higher highs, some improvement in structure. But the thing is, it established this resistance. So in order to really confirm that the structure is changing to bullish, it needs to clear that resistance, because in a weak market, resistance levels are respected, okay? And in a strong market, they're not. So right now, based on this, even though we don't have the lower low, which could be the beginning of a change, we can still qualify this as a weak market. So that's what you have to consider. Now, when it comes to taking a trade, should you avoid taking a long in a weak market? Well, it might be changing. This is where you have to decide on how much risk you want to take, or what your risk tolerance is. You have the higher low argument, all right? So it might be changing. Now, taking a long here is aggressive because of that reason that I just mentioned. Your risk can be defined by this little consolidation low, which is what is that? 160, 164. You give it like maybe 160 even. Just kind of give it an even number there. Give it a little room. This thing closed at 168.04, so maybe 160, 163 or something, right? You need to give it some room, because at this point, if you're buying it now, you're risking 5 points. All right. Now there's a good chance that it goes back to that support and breaks it, because this thing has yet to prove that the broader structure is improving. The reward for that risk, though, if you're willing to take that greater risk, could be good, because if it goes up to that resistance and clears it, I mean, you're looking at, 50 points, 40 points, and you're risking like 5 points, right? 5, 6 points, something like that. And 40 points is the resistance test up in there. At least, that's at least 40 points. So even if you want to be a little more conservative and say 30 points or 25 points, that's still like 5 to 1 reward for the risk you have to take. So that part of it is attractive. You have to decide if you're willing to take the chance that this higher low sticks. Okay, it's really that simple. And if it breaks, you take the loss, you step aside, and then you see how this thing behaves at the potential double bottom. If it can give you something like that, and that's around the 152 area, you can round that to 150. All right, or perhaps another idea is you could take a smaller position. So let's say instead of 100 shares, let's say you just buy 25 shares, okay? But instead of putting your stop so tight at like 163 or whatever, you put your stop at the double bottom low over here, and you give it a much wider stop, but you're compensating for that with your smaller size. So if it pulls back 15 points on you, it's not going to be so painful because you purposely took the smaller size just to mitigate that risk. All right, does that make sense? So thank you for asking. It's a nice example of certainly of a stock to keep an eye on. And thank you for asking for that. So Savi, Litecoin, let's take a look. Oh, so Litecoin, again, Litecoin is basically follower, Bitcoin follower, right? Double top in play and all that other stuff. So these things look like they're all in pullback mode. Again, no surprise. So you're looking for the supports, right? And your first support on Litecoin, we have these minor supports across the board, it looks like. And we just looked at a couple of these coins and they're all showing the same thing. You're looking at 162 area, maybe even round that to 160. But with the double top in play, that support is likely to break. Okay, it may not, but I would not step in front of that. All right, this is not a time to be aggressive when you have such a bearish structure off of a clearly noted resistance, right in front of you, basically. So the next support after that you're looking at is 145. So what you want to see around that 145 level is you want to see some type of reversal pattern. Now here's the thing with these, right? And this goes for the other coins that we looked at as well that are showing a similar situation. If you get the pullback and this thing goes to like 145, that's not enough to get involved. All right, it's just a starting point. It's like, okay, we're at a good level now, but it may give you the next candle once it goes to 145, may be a buying candle. But in that type of situation, if you have a lot of bearish momentum and it's steep, like you get a pretty large candle or series of candles, stepping in front of that is really a bad idea. Okay, it's like stepping in front of this candle right here. You don't know if it's going to be that big. So what you need to do in those situations is wait for stability. You need to wait for something like this to develop. Right? You see that on the chart? Something like that, as you can see, was not established in 5 minutes. This took like 2 weeks, right? That's about 2 weeks worth of candles right there, or at least a week and a half, something like that. So just keep that in mind. If you get back to that level, because we're not, at that point, we will not be in a clear bullish structure anymore if you're breaking those supports. Bigger picture, we can argue that the broader trend is bullish, but smaller picture, these things are range bound, right? People are, how is it range bound? If you look at my 4-hour chart, this is a bullish trend, right? On a 4-hour chart. But the bigger picture, this is a wave 4. Wave 4s are consolidations, and this thing is behaving just like Bitcoin should be within a wave 4. That's why it's no surprise to me. All these big mouths that are calling for 100K just because Bitcoin has one green candle are either fooling themselves or they're just looking for attention, because we're in a wave 4 and there's no evidence that says that wave 5 is in progress. Right? We need to get that evidence, we need to see a clearance of 64K, which we're nowhere near. So just to give you some perspective. All right, so thank you for asking. I hope that helps. So I gave you the support, and the resistance right now is obviously this double top. I mean, that's your resistance, which is what? What price is that? That's 189. So that 189 area. And if this support breaks right here, this 160, if that breaks, that's going to be your new resistance, 160. All right, so thank you for asking. Let me see what else we got. Hey, from Ray Schwartz, my man Schwartz from Romania. He's my representative from Romania. He's my #1 Romanian follower. Schwartz. Thanks, Schwartz, for joining today. David, from Miami. Oh, nice. I like Miami. That's probably one of my favorite areas in Florida. Okay, I had a nice bounce in OZSC yesterday. Okay, Mike, OZSC. Let's see, what is that? I'm guessing that's a stock. Okay. Oh, it's energy. Interesting. Nice bounce. All right, so let's see what you got here. I'll tell you what, I like this type of pattern. This general pattern here is a very interesting one. So this thing has been out of play for months and months and months, right? Going all the way back to April or whatever. It's been just consolidating and blah, blah, blah. And you may have now a breakout trying to develop. So here's the thing. These type of patterns can be great when they squeeze hard because they get on all the day trader radars and blah, blah, blah. And then you get, one of these type of vertical moves. But the problem right now is, so you started out on the right foot yesterday, right? That was the kind of candle you want to see. This candle today is what you don't want to see because you want to see follow through, right? That candle right there, let's make that bigger. That candle is not a sign of follow through. That's a fake out, all right? And this thing's going to close in like 15 minutes. That's a fake out right in this resistance area here. So hopefully you've taken some profit off the table. If not, you have to decide how much risk you want to take on something like this because it may test. I mean, it's practically at the support now, right? The support is around, what is that? Little over 6.25 cents, something like that. And if that breaks, you're looking at this low over here. What is this low? 5 cents. You're looking at something like that. So, and sometimes, when too many people pile in, it breaks the supports because everyone's getting margined out or they're all piling out at the same time or whatever and blah, blah, blah. So they all get sucked in and then they all have to pile out. So you have to be careful of something like that and you have to decide if you want to take that risk. Otherwise, if you're long and you got long on the breakout and you get this really is what calls for an adjustment. This is what I always talk about with like something like Bitcoin when everyone's all excited and Bitcoin's breaking 50K and all this other nonsense. When everyone's buying it they're all buying at the top. I tell them, look, you want to go for the breakout, okay, but it needs to follow through. If this is the next candle that you see after you buy a breakout, you need to make an adjustment. Otherwise, you get stuck in hope mode and you know what takes place after that. So thank you for asking. That's what I have to say about that one. And thank you for bringing that one up. Those elongated consolidations could be nice plays when they work because half of the population that's in that trade, half of them are short, right? Half of that population is short. So when they all get squeezed, the thing goes vertical. That's why you saw things like AMC and all those other ones go nuts because, half of the population is short in those situations when they get elongated like that. All right. Also, with those particular stocks, there was a short float to begin with. There was a heavy short, and there weren't a lot of shares available to begin with. Right. So I don't know if this is one of those, but anyway, it's the same idea though. So thank you for asking, Isaac. Cool. I'm glad you like the stream. Mana USD. Let's take a look. Mana. All right. So let's look back here a bit. So as we know, probably I'm going to assume it's a follower because most of these don't do their own thing. And let's see, you got a resistance right there, which looks like you're getting a reaction off of that resistance. Look at today's candle. And what is that price? That is just over $1, right? Slightly over $1, okay? And Bitcoin is pulling back. So, you have Bitcoin basically saying that it's pulling back and this thing found a red candle or selling activity at a noted resistance. So if you're long, hopefully you've locked in some profit or you've made some kind of adjustment. Again, I speak from a very short-term swing trade orientated perspective. If people are coming here looking for investments, I'm not looking at that time frame. Okay, and most of these coins, by the way, are not investment grade. Most of them are junk. They're like penny stocks. If you're going to invest, find yourself a high quality stock. There's plenty of them. So as far as that goes, support levels. So if you're not in this thing and you're looking for a support, this is your support right here. That is what price? 74 cents. Yeah, just about 74.5 cents, something like that. So you have a little ways to pull back there. If that breaks, you're looking then at, you have a support over here. What is that? 69 cents. That's not too far away from that 75-cent area or whatever. And then you have something around this area here. What price is this? What is that? A low 48 cents. So basically 50 cents. All right, those are your support levels. And what you want to see is price retest one of those levels. Because look, they retest those levels. And then you want to see some sort of reversal activity, and you want to see a similar thing in Bitcoin. Let me just bring up Cardano real quick. Because, oh, look at this. hype nonsense, right? People are asking me, Cardano, Cardano. And how many videos with titles did I see? Cardano is going to be the next blah, blah, blah. It's going to be at 5,000 next to Ethereum. Right, here you go. Thanks for buying. Thanks for telling me, Mr. Fake Guru. So anyway, my reason why I'm bringing up Cardano is because look at this situation. Forget where it is now. Look at this situation back here. All right, it actually was fooling around at these support and resistance levels before it went somewhere. Of course, you know, Bitcoin went and this thing started to do its own thing because of all the hype that surrounds it. My point is, though, these levels are still good points of reference, right? So the same with your mana there. Keep those levels in mind for a point of reference. If you get the reversal candle that should develop, because again, you're anticipating it. If it develops, it appears. Now look for confirmation from Bitcoin or Ethereum. They should be doing a similar thing. If they're not, then most likely your candle is going to fake out. Okay, so you can hopefully that will help you. Thank you for asking. Hey Kim, good to see you. Does it make sense to buy SQQQ? That's a good question. So SQQQ, this is the Pro Short ETF. And here's the thing. This chart, by the way, is useless because it's a derivative of a derivative. The SQQQ is the QQQ short, leveraged short, which is the NASDAQ 100. So if you're going to make any timing decisions, you have to look at the NASDAQ 100, right, which we looked at earlier. So here's the thing. This is a very tricky game. If you're going to do this, how much is this thing right now? $7.78. You could buy some shares, but you have to, the market hasn't really, there's no catalyst in this market yet. So we have to judge it by the Qs, first of all, the NASDAQ. This is where your judgment has to come from in order to take a position in the SQQQ. Is there a sell signal in the SQQQ? Yes, there is. How much? It's 287? Okay. So we took out yesterday's low. Actually, the previous two candles took out their lows. I don't know if Jerome Powell spoke today, by the way. Maybe someone can confirm that. I know he was supposed to speak this week at the Jackson Hole Symposium. I don't know if he spoke yesterday or today. If he spoke today, I'm not surprised to see this. Can you imagine the jokes at that symposium? I can only imagine how boring they are, right? A convention of economists and central bankers. They're probably like all sitting there, and then you hear in the background, Bueller, Bueller, Bueller. You remember that movie? What movie is that from? What movie that is from? Anyway, my symposium joke. Anyway, so here's the thing. As far as SQQQ, if you take a short or you buy that, because basically it's a long way to go short, you're taking an aggressive position because this thing, although there's a sell signal, this trend is definitely not on your side. So what should you do? Again, it's aggressive. If you want to take that risk and hope that this thing goes somewhere, also, if you take it and it turns green on you, you should probably take some money off the table quickly if you get to one of these support levels, because buying so far buying continues to step into this thing and you don't want to get caught, right? So you're better off taking profits quickly on such an aggressive trade. Now, what would be the more appropriate type of short trade? Well, you get a steeper pullback followed by a lower high, kind of like what it was doing back here. That wasn't a steep pullback though, okay? So you want to see a steep pullback. Look at this, look at this back here. In fact, we called a short back here. I called a short on this situation back here, and it was green temporarily. But you get a steep pullback followed by this. You want to see this. It takes a lot of patience because you have to wait for all of that to develop, okay? And it can take days. So that would be the more conservative short, or the more conservative time to get into an SQQQ. Otherwise, it's aggressive, and you need to be prepared to get out quickly and take a small loss quickly. We've tried a few short positions, and they've been very tough, obviously, as you could see in this market, going back a number of months. So thank you for asking about that. Good question. Okay, David, SOL. Oh, let's see what's going on with SOL. So this one was a big hype one just a week ago or 2 weeks ago. Everyone, SOL, get in your eyes. Okay, so what's going on here with this thing? Well, the structure, considering where Bitcoin and the rest of the market's going, this isn't bad. I mean, you have this nice bullish leg. You have a consolidation developing right now. It's still inside of that consolidation. So here's the thing. You can measure risk. This is aggressive. Here's why. This thing was doing its own thing, but once that hype train runs out, you have to assume that at some point this is going to stop doing its own thing, because it wasn't always doing its own thing. For a while it was following Bitcoin, right? So if it goes back to that relationship and you buy this thing on the breakout and Bitcoin steps in and says, well, you know, you got to follow me now, you're going to get caught in a fake out. So you need to be prepared for that. But assuming that this thing is going to stay on its own, right, for some more time longer, because again, these relationships, these intermarket relationships, they change, and you need to be prepared for that. There's nothing that's like constant. So you have a high or low right in this area, right? You have a high or low right here. You can measure risk from that. So you have, what is that? 75 basically, right? That's your high or low. This thing is at 75. No, that's not right. Hold on. What is that low? I'm sorry. 66.22. That's this area right here, 66.22. So you could round that to basically 66 even or 65, whatever. And you're basically 10 points above that right now. You can go for the breakout, which would be here. What is that? 79. So this thing starts pushing 80. You want to give that a try. You're going to be taking about 15 to possibly 20 points of risk. That would be the reasonable place to put the stop. So you're going to have to size based on that proportion, and then you need to see this thing break out and go vertical. Okay, it needs to do something like that. If instead it breaks out, you know, goes to 81, 82, you're like, yeah, and then it turns into a bearish pin bar in that area after only going a couple of points, then it's probably going to fake out. So that at that point, you can adjust your risk from, instead of risking 20 points, perhaps you get out right there and take a small gain or something, because you don't want to be stuck in a fake out, right? But that would be an aggressive way to play this one. So, you know, some people, they have time to babysit these things and, you know, all that kind of stuff, and that's fine. So that would be an aggressive trade. A more conservative thing on something like this would be to see if this thing fakes everyone out and pulls back to a real support, which is around here. 44 even, right around here. That would probably be the more conservative thing. You also have another support around here somewhere. So you have a zone, right? What price is this? That's around 49. So basically between 44 and 50, you have a support zone. That would be the more conservative place for where probability favors you more as far as a bullish reversal goes, based on this structure. Otherwise, you have that aggressive scenario that you can work with. Again, with those aggressive scenarios, if you're like a beginner, the hard part of it is not recognizing it on the chart. That's easy. It's also easy to place a buy order and place a stop. All of that is easy. What is not easy is to adjust when things are not going the right way, because you may see things not going the right way, but your mind doesn't want to see that. So often what it will go for then is hope, because especially in this environment, hope has paid off pretty well consistently. But hope is a really bad strategy when it comes to markets. This is a temporary thing, okay? And all these people that have been getting away with it, they're going to be the same people that are going to get caught when the party's over, right? That's why, forget hope. You need to be focused on risk and managing that risk. So the problem with beginners is they don't know how to make that adjustment. They don't know how to get out fast enough because they don't recognize what's going on, or they do, but they don't want to accept it. So I don't want to take that small loss. I'll just hope it'll come back. It always comes back, and blah, 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 okay? So I know I've made that point a few times, just making it again. So I hope that helps. Thanks for asking. Hey, go forth. You'll never get a following on YouTube. You don't sell lies and dreams. Well, I appreciate that. I don't, right? I'm straightforward. I'm as transparent as possible, because my goal is to help you get that perspective that is so lacking, especially on these platforms like YouTube. It's ridiculous, the stuff that I see. And I'm like, man, back in my day, people would never have gotten away with this stuff, because back in those days, you had to have some sort of professional background or something. You realize today, anyone can start a YouTube channel, learn a few words, right? Support, resistance, RSI. I am now an expert. Okay, and now they market themselves as an expert. And if they know how to appeal to emotions, that is really the competitive advantage in this guru game is really that. All right, that's what they're all competing for, your attention, and how they're going to get your attention with emotions. Marketing is usually what they target are emotions. You don't see like ads that appeal to something that's not emotional. Like forget trades, like just another industry. You know, they always show, I don't know, whenever you see like a car commercial, right? They always show things that appeal to the emotional reasons of why you would buy a car or whatever, right? You know, you get the point. So, or if they show like a food commercial, right? They always show people having a good time and having fun and their family and blah, blah, blah. And that's what you do. You eat with your friends and yeah, emotional, right? They don't show it in a more like scientific way. Well, here's the food and here's the nutritional value and this food is good for you and blah, 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 blah. Most of the stuff on TV isn't good for you anyway. All right, enough of that rant. Let me continue with the charts here. See, go forth, see what you got me started. All right, Joel. I thought short meant sell. Okay, so no, Joel, that's good that you mentioned that. Some people may not realize. So you may sell, could be selling along, right? So short means I'm going short as in I'm taking a position to benefit if the price goes lower, right? So I can sell to go short, but I can also sell to get out of a long. All right, so just to make the distinction. Thank you for mentioning that. Isaac. No problem. It's one of the few people I consider a mentor, even though we don't see each other. Oh, I appreciate that, Isaac. That's very nice of you to say. Thank you. Oh, in Kentucky. Okay, welcome. Elizabethtown, Kentucky. Cool. So yeah, I'm broadcasting from the greater New York City area, northern New Jersey, in case you can't tell from my accent. Oh, so and Go Forth is from Kasim. I didn't realize that. Oh, cool. Okay. That's very interesting. I didn't know you were all the way over there. Isaac. Mana chart looks like Cardano before it popped. Okay, no problem. Yeah, so again, you have to understand something about these altcoins is, you know, there are these chat rooms all over the place and, you know, they all get together in a chat room or something and then they start some kind of hype nonsense, right? The pump and dump thing. They start that somewhere or they have these videos on YouTube or whatever and it gets that herd mentality going. And that's what they're doing. The herd mentality is what drives something vertical because it's the fear of missing out amplified. They're all piling in because it's, you know, they think it's going to double and triple. And then you have some big mouth who's amplifying, AXS is going to go to 100 by tomorrow. Don't miss out. You're going to miss it. And that they stimulate all that, whatever. Meanwhile, they own tons of it. And what do you think they're doing? They're getting out on all these, you know, people that are chasing money. Like I said before, don't chase money. Think defensively. Conserve capital. Every decision you should make when it comes to a trade is, what's my risk? What is the potential that I can justify my risk? And is it worth it? Do I want to take this risk? And always make sure that your percentages of your risk are proportional to your account. Big mistake I see all the time. And it's very understandable, the mistake, is people will start out with $1,000 account and the appropriate risk for a $1,000 account, again, we're talking 1 or 2%, maybe 3% in a trade. What's 2% of $1,000? What is it, $20? So most of the time you're taking positions that if you're wrong, right, if whether it's Forex or whatever it is, you're taking a much bigger than $20 loss. If that's the case, you're taking risks that are out of proportion to that account. That's why you wipe out the account, right? That's why a lot of these Forex brokers have these fixed, I mean, I'm not here to talk about Forex, but they have these fixed position sizes so that you can't appropriately adjust your risk, right? Especially when you're using leverage. And they know that with the small accounts. So that's why they're very happy to give you all that leverage and all that other stuff. Anyway, so thanks for asking about that. Let me see, Mike. I think the bounce on OZSC, okay, which they will utilize, okay. I'd like to make you some money too. Talk me. Oh, well, I appreciate that. Mike. Thanks for mentioning that. Good one for the radar. Okay. Oh, no problem. That's cool. All right. So how am I doing with time? I've answered all the questions. Do I have any other questions? Oh, look, that's just about time. I have a couple more minutes. Any other questions before we wrap this up? Great questions, everyone. I really appreciate everyone's participation. Look, I know the market is, the stock market especially, has not been in a very not been in a very productive, it's not been a very productive environment. I mean, swing trades have been slow. You have to understand something, especially for people that may try out, or we have a signal service and all that stuff. All the links are in the descriptive portion of the video here. But you have to understand something. We don't force trades. So like Andrew may call some day trades here and there. Maybe there's a swing trade here and there, like I was showing you Bumble before. But in this environment, it's often better to just wait, and people have a hard time waiting. You know, it's very hard to wait because of all the emotional stimulus and all the other stuff that we're constantly facing. And some ways that you can help minimize this is, for one, acknowledge that there's no such thing as opportunity cost in a market, because there are always more opportunities. You're not going to run out of them. As long as the market's open, you're not going to run out of them. You just have to wait for the next one. It may take a little time, but waiting doesn't cost anything, right? So that's one thing you need to acknowledge. That would be helpful. And then also like that defensive stuff that I was talking about. Instead of chasing the money, you know, focus on the risk and the risk management. And over time, you will not get lured by those emotional appeals, right? Oh, you're going to miss out. Oh, you know, or you're in a position and it's going against you and you went to bang it out, and now you're banging out at the bottom because your position was too big and blah, blah, blah. That's all rooted in, I need to make money, right? And we're all here for that reason, of course. We're in the financial markets, but it's very counterintuitive because we are up against our own human nature, which is not compatible with a highly random, abstract environment like a financial market. So we all like to use common sense and, you know, the things that the logic and all the stuff that was built into our nervous system or whatever, right? Our brain. But it doesn't work here because we can't, number one, we can't see the actual forces that are determining the value of an asset. We think we can. We think all these things because we're constantly fed lies and illusions. We're constantly faced, oh, you know, the fundamentals of blah, blah, blah. Management's doing this and blah, blah, blah. And the news said that and this expert said this. It's all nonsense. We can't actually see the forces that determine the value of an asset, okay? Because there may be some smart money out there, a large institution or fund manager who has better information than us. He knows what's coming out in the future. He knows the news that's coming out because he can pay for it. We can't. He may have insiders at a company feeding him information, whatever, right? All that stuff goes on. He may have insiders in a government telling him, oh, NFP is going to come out this way. All right, so is it illegal? Sure. But if they can afford it, they can get away with it, they do it. And now they have an advantage over everyone else, and they can place big bets, right? And that's what an institution, they get away with those big bets. How do they do that? Because for one, they have better information. So my point is, they're going to position themselves in a way that they know, because they know basically how things are going to go, okay, generally. And they also know their friends, right? They call their other the hedge fund friends. Hey, what are you doing? Oh, this is what we're doing. Hey, what are you doing? Right? Collusion, that's illegal too. But I'm sure they have their way of getting around that. Anyway, my point is this. They know, they're the ones that set the value, right? Their orders, their large buy and sell orders are the ones that determine the value of an asset now and in the near term. And as things change and as they process new information, they're going to adjust their positions however they have to, okay? And they'll, of course, they're always managing their risk because they can afford to pay a risk manager to do that, okay? So they have all kinds of complex things to hedge and blah, 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 blah. So my point is, by you stepping in and thinking, oh yeah, my logic, and this market should do this, and blah, 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 it's all just a bunch of nonsense. So you need to get away from that logic, because again, we can't see how a price of an asset is actually determined, because we can't see the accounts and the orders that are shaping that value, is my point. All right, enough of that rant, because I could talk about that for hours, and I'm going to put everyone to sleep, especially people that it's like 3 a.m., you know, on the other side of the world. All right, so Isaac's asking about AMP. Let me do AMP real quick, and then we'll wrap this up. I like to talk. I talk too much. Okay, so let's take a look. AMP USD on Coinbase. All right, so here's the story. So here's the thing. You have this resistance right there. You have a reaction off that resistance. You also have a level up in this area right here, which it reacted to there previously. What price is that? 88. That's just over 8 cents. Okay, and then you have this reaction over here. So you have some resistances. What's interesting about this is you had the consolidation, like I was telling you about before, like we were looking with what was it, QTUM or whatever it was, the one that someone else mentioned there, or maybe it was a stock, I can't remember now. And you had the attempted breakout, but it failed. All right, fine, no problem. So you're back at the support level. What do you do now? In this situation, first of all, you're back inside the range, okay? And you don't have a candle that's actually giving you a buy signal here. So there's really nothing to do. What you can do is wait for support to develop or another buy candle to develop off of that level, which is around just over 5.5 cents, right around there. You can wait for something like that and see if you get another breakout attempt. Now, again, if Bitcoin fails, which it's trying to do, it may break that support. So you need to be, it probably would pay to be conservative and wait for some confirmation, not only from this chart, but Bitcoin should be doing something similar, meaning you're seeing a buy signal in Bitcoin while this thing is at a support and giving you a buy signal. That would be the more conservative thing to do, and then give it a try and see if it can break out then. But the fact that it tried and failed is problematic, because now you have a lot of people that are caught in this thing. That's why when you see those, there's a good chance it can break that support, because they're all going to bang it out at the same time. So the mistake you need to avoid is stepping in front of that. Okay, so you have that support. If that support breaks, you're looking at this area here, which is not that far away. How much is this? 5. That's just about 0.53. So that's just almost 5 cents even. Looks like 5 cents is a pretty important level on something like that, right? If it takes that out, just step aside and wait for this thing to stabilize in that type of situation. Again, these things are not leaders, and they don't often trade on their own, so you do need confirmation from something like a Bitcoin or Ethereum. So just make sure you refer to that as well. Okay. All right. So I'm going to leave you with that, and I gave you my rant on institutional blah blah blah. So I hope you found that helpful. I want to thank you all for your great questions and your participation. What's Schwartz saying? By the way, Binance doesn't let people withdraw their money via bank transfer for 3 weeks now. Maintenance. Such be. They only let you withdraw with one. Oh, interesting. Well, Binance. I mean, hey, Schwartz, none of those exchanges, none of them are regulated by a financial regulator like the SEC or the NFA. So they can do whatever they want with your deposits and make up their own rules. And that's the thing with those exchanges, and if things get out of hand, they're going to just do things that are in their own best interest. So just another layer of risk you should always consider. That's why they have Binance US, I guess, to make people feel more comfortable. And see, look, we have some sort of regulation. We have Binance US, and we're filing. Yeah, right. Thanks a lot, Binance US. So just something to keep in mind. The closest exchange, the closest one you have to any type of regulatory anything is Coinbase, because they have a public stock, right? And the SEC can say something about the way they conduct their securities business, whatever it is they're doing. But as far as Bitcoin regulation, no, there's nothing. So they can do and say whatever they want and change rules however they want to. Forex brokers were notorious for doing funky things like that years ago, which they eventually got in trouble for, especially changing margin requirements without telling anyone and that kind of stuff. Okay, so no problem. Thanks again. Yeah, stay away from Binance. Okay. So, well, Schwartz, any alternative? You have Coinbase. I mean, there's a few other exchanges, but they're all going to be like in a similar situation, right? I mean, so it just pays to do their homework. I don't use anyone besides Coinbase, so I really can't give you any firsthand recommendations on something like that. But maybe someone else wants to mention something or who they use. But they're all, just keep in mind, when it comes to risk and them playing games, they're all pretty much in the same boat, right? Because there's no regulation. So if it comes, you know, when push comes to shove, they're going to do things that are in their best interest. And if you're affected by that, they're going to be like, well, what are you going to do? Hey, you took the chance of, you know, you put your money in this account, you signed the fine print, you read it, you signed it, and that's the risk you took. Sorry, we're closing and we're taking your money. So yeah. All right. So anyway, thank you for asking. Great question. All right, everyone. So I want to thank you all, especially those that are in these time zones where it's like, you know, after midnight and stuff like that. I appreciate you taking the time, listening to my analysis and asking questions and participating. It's always a nice thing. I enjoy helping people, and I hope you found this, you know, insightful, so that at least you have some idea of what's within reason over the next few days. You know, again, don't react. Really learn to anticipate. Right, that's the goal. Have some levels in mind, and then be prepared for what is likely to happen at those levels. And then the market either delivers or it doesn't deliver. And if it doesn't deliver, you have to adjust. Okay. Well, and if you're in a position, sometimes that means taking a small loss or taking a small profit or whatever it is. But that's what you need to get good at, is really making those adjustments. And it's not always going to be right. Sometimes you're going to be wrong in adjusting, but that really, being right doesn't really matter. What really matters is keeping your risk managed within a particular threshold so that you're keeping your account growing even if it's slow. Okay? Anyway, so I'll leave you with that thought. Thank you so much again, everyone, for taking the time here and listening today. If you have any other questions, you can find me over at Greenbridge Investing or whatever. You have the links in the descriptive portion below. And that's it. So my name is Mark Principato, Mark P Markets, and thank you very, very much for watching.